For Muslims, like anyone else, owning a home represents stability, family, and a place to build a life. The desire to provide a nurturing environment for loved ones is universal. However, the conventional path to homeownership often involves taking out a mortgage, which presents a complex issue from an Islamic perspective. This is primarily due to the involvement of interest, known as riba in Arabic, which is strictly prohibited in Islam. This prohibition is not arbitrary but stems from the ethical and economic principles embedded within Islamic teachings. The question then arises, how can Muslims reconcile their aspiration for homeownership with the Islamic prohibition on interest-based transactions? This dilemma has led to considerable discussion and debate among Islamic scholars, resulting in a range of perspectives on the permissibility of mortgages. Riba, in its simplest form, refers to the charging or paying of any predetermined excess on the principal amount of a loan. It is considered exploitative and unjust as it creates an imbalance in transactions where one party benefits at the expense of the other without any real economic activity taking place. Islamic teachings emphasize fairness, justice, and risk-sharing in financial dealings, principles that directly contradict the concept of riba. The Quran and the Hadith, the sayings and practices of Prophet Muhammad, unequivocally condemn riba, categorizing it as a major sin. The rationale behind this prohibition is multifaceted. Riba can lead to economic inequality, trapping individuals and communities in cycles of debt. It promotes greed and discourages charitable giving, undermining the social fabric of society. Instead, Islam encourages trade, investment, and profit-sharing ventures based on mutual consent and shared risk. While the prohibition of riba is clear, the application of this principle to modern financial instruments like mortgages is where opinions diverge. Some scholars maintain a strict stance, deeming all interest-based mortgages impermissible. They argue that the involvement of interest, regardless of the amount or the lender's intention, renders the entire transaction invalid. Other scholars, while acknowledging the prohibition of riba, offer more nuanced interpretations. They argue that certain types of mortgages, particularly those structured to resemble lease-to-own agreements or partnerships, might be permissible if they avoid the elements of riba. However, even within this perspective, meticulous scrutiny of the contract terms is necessary to ensure compliance with Islamic principles. Fortunately, the growing field of Islamic finance offers Muslims alternative pathways to homeownership that align with their faith. These alternatives are designed to avoid riba while adhering to Islamic principles of fairness, transparency, and risk sharing. One popular option is the murabaha contract, where the financial institution purchases the property and sells it to the individual at a higher price, payable in installments. Another alternative is ijara, similar to a lease-to-own agreement, where the individual makes periodic payments to the institution, gradually acquiring ownership over time. Additionally, Islamic banks offer musharaka partnerships, where the institution and the individual jointly purchase the property and share in the profits or losses upon its sale.